Hello and welcome to the market update for Tuesday, August the 10th. We're seeing kind of a stagnant moving market. I've warned about this a few times. I mentioned this last time we sold off, that we didn't sell off deep enough. So I felt like if we did get back to new all-time highs, we would likely stagnate a little bit. There's just not a lot of real aggressive buying taking place just yet. We saw that in the breadth numbers. Now the breadth numbers did start to pick up a little bit late last week, and we'll take a look at that. I said one quick way you could kind of measure breadth or see how the breadth of the market is improving or not improving is to watch the Russell 2000, because it's an index that's dealing with 2,000 stocks as opposed to the Dow 30 stocks. S&P 500 500 stocks. It's a broader index, so that when you see that outperforming, it usually means that more stocks are participating. So we have started to see the breadth pick up a little bit, but just still, it's still kind of lagging. One of the things that's been a little bit frustrating is overall, we'll look at this when we look at the charts. Overall, the charts still look like in the longer term we're going to go higher. It still looks like the market wants to go higher. But what's been hard to read is in the shorter term. We've had some of these bearish reversals and bullish reversal days that have just flip-flopped. We have a bearish reversal day that looks like the market should drop the next day, and the next day it may drop just a little bit, but then it has a bullish reversal price action. And then you get confident that it's going to go higher, and then the next day there's a bearish reversal price action. So it's been a little bit difficult to predict, or to forecast is a better word. We don't predict, we forecast some of the shorter term movements of the market. And that's always difficult for me because, I like many people, when I decide to get into a trade, I'd like to see it work, have confidence that it's going to work right away. I know it's not always going to work right away, but I'd like to have confidence in that the shorter term price action is, I'm able to read that, and there's a good chance that the market will go up the next day or down the next day if it's a short position. And it's just been kind of unpredictable in the shorter term. But the good news is the longer term charts still look pretty good. And we can still have confidence that ultimately we should move higher. It just means we'll have to have some patience day to day on some of this. We'll see this as we look at the portfolio too. The portfolio, some of the stocks have pulled back a little bit, but nothing to panic about, nothing to get concerned about. That's part of the process. And hopefully one of the reasons why we're kind of running this portfolio now and kind of putting all this stuff together is to kind of show you how to manage things and how to read kind of what's going on, read the price action, read the trend, manage the trend, and just to be patiently let these stocks do what we're expecting them to do. But we'll get to that here later part of the update here. Let's start with our direction alerts. The indicators are back to working again after a little bit of an adjustment last week. We are moving back up again. Momentum is moving back up. It's not in the extreme range yet, but it's moving in that direction. Now I go back to something I said before the last market sell-off. I said that although the market was looking weak, we were not in an extreme overbought condition. So I did not feel like we were going to get a bigger correction at that point. And sure enough, we got a little bit of a sharp pullback, and then the market came right back again. What we're looking for as far as being a contrarian is if we start from this market, as long as this market's been moving up, and just the time of year too, we get a lot of market sell-offs in August and September. They tend to be the most bearish months of the year, typically. If we rally up in the next week or two, we start to get into these extreme ranges, that's when you're going to start hearing me talk about the potential for a bigger correction. And that's when we may start to take more defensive measures, lighten up the portfolio a little bit, tighten up stops a little bit, and start to look for other clues, because usually that'll be the first clue that the market is overbought. And then you start looking at bearish reversal candles or price action that could be starting to take place, or even something like a Fed meeting or a jobs report or something that could be a trigger that could cause selling. Now, why is that significant when you get into this extreme range? Well, when you get to that extreme range, you get on all three of these indicators, what it tells you is that the market is overconfident. It believes that it's going to go up forever. There's no way it's going to drop. It feels safe to get in. One of the phrases I use all the time is when it feels safe to get in, it usually isn't. When you feel like, hey, I'm going to get in now because there's just no way I'm going to lose money. Everyone on TV is telling me the market's going to go up. Everyone loves what the market's doing right now. It's safe to get in. And that's usually the point when it's not. That's usually the point where you get these bigger sell-offs that really crush people. So we're not there yet. And we've been talking about this for a while, and we haven't been there yet. But I'm just preparing you. These are things we're looking for. Is when it does start to happen, we're going to point it out, and then I want you to watch the process. Now, these things don't perfectly predict sell-offs either. It could be, a few weeks before you get a bigger sell-off, or you could get a smaller sell-off that bump them right back into the off the extreme range, and that continue the uptrend. But it's pretty remarkable when you get these extreme ranges or levels here, that it's pretty remarkable how often you get those corrections and how, although you can't perfectly predict the pullback, it's pretty close. You're usually within the ballpark. And what I look at in that situation is you start to look at what is the risk of me holding this thing going higher versus the risk of it dropping. Is it worth it to try to get that extra dollar out of the trend when I could lose 10? Because remember, when markets sell off, they sell off a lot faster than they rise. The Wall Street phrase is it's an escalator up and an elevator down. You gradually move up, but then when you come down hard. So because if you understand that, then you have to manage that reward to risk. Is it really worth trying to grab that extra dollar or two of profits when it could drop $10 or $15 and I could wipe out so much of what I've already gained? And again, this is what gets people in trouble, is because the greed in that situation takes over, and you're like, well, this market's not going to drop. There's no way it's going to drop. Why not try to grab that extra dollar or two? And you stay in too long, you ignore those signals, and you end up, when that elevator drops, you end up giving back a good portion of your gains. But again, we're not there yet, but that's something we'll be looking at. One thing we really want to focus on too, again, is the breadth indicator. We're still in trending, but we're moving this direction. Again, this is going to tell us if the participation is there. Are more stocks participating? More stocks need to be participating in a healthy trend. And if this continues to lag, and if those other indexes reach extremes and this continues to lag, that could be a warning sign, not of a major correction, but of a quick sell-off, because it just tells you that there's only a handful of stocks that are driving the indexes higher, and it's not a healthy sign. So we'll keep an eye on that. So far, it looks like it's moving in the right direction there. Then you have sentiment, which is again moving. It's in the high range, but it's not in the extreme range. We'll continue to watch that. Now, these can move pretty quickly. If we get a couple of really big up days, they can jump pretty quickly into those ranges. So, and actually, that would be something to really pay attention to, because of the fact that we've been really kind of stagnant lately. Is if you get an explosive day, that could move some of these indicators up there pretty quick. It also could mean that the rally could last a few more days after that, because that could just be the initial surge of people jumping in, getting excited to buy again. And right now, that's the problem, is there's not a lot of excited buying taking place, and that's why you're getting more of these stagnant results. And we'll see this on the charts here in just a second. If we go to the buy-sell ratios here, I think a significant thing, well, first of all, here you can see kind of the whip sign that's taking place of the buy and sells going back and forth. But the key indicator for us, we talked about this, is the buy-sell ratios of the entire market. All the stocks out there, we're right above 1.01, and that's where we want to be as kind of a minimum to start looking at buying some of these high strength ranked stocks. When we're down below that, you can still buy high strength ranked stocks, but it's not surprising if some of those aren't working as well as they used to. Again, this gets back to that breadth. The fewer the stocks that are participating, the harder it is to capture the ones that are moving. When a ton of them are moving, it's really easy to make money because they're all moving, and they're all moving maybe not the same amount, but they're all moving in that direction. And so you just have that higher probability of making money. I'm telling you, that's a real simple thing to watch and be patient for. But if you can do that, you can stay away from market conditions where the breadth is not strong. You'll find that it'll feel when you do start getting into trades when the market breadth is there, it'll just feel like it's easier to make money. It just feels like you almost pick anything to get into, and ends up going up. But it takes patience. It takes you have to kind of learn to recognize those conditions and not to over trade in those conditions that aren't real great when the market breadth is real low. So that's good right there. We've been waiting for that to get above 1, and it's above 1 now. Sentiment indicator here is we're not extreme range. We're getting a little close to it. And like I said, any sort of surge would probably put that into that extreme range pretty quick. But we're not there yet. That's something we'll keep an eye on. Another thing you can watch is you can watch the indexes here, and keep an eye on these buy-sell ratios for the different indexes. They're starting to pick up. The Dow is about 3-to-1 buys to sells. That's all. These are still low. Where they get extreme is when they get to double digits, when it's 10-to-1 or 15-to-1. And again, we're not there yet. So this is telling me there's still a lot of upside potential there. All right, let's get into the charts. And we're taking a look at the S&P 500 here. Hold on just a second. All right, so what we have today is we've got the S&P and the Dow close to new all-time highs. NASDAQ has been lagging a little bit. So we have a little bit of a mixed market condition here today. That's not the greatest. You'd like to see all the indexes moving in the same direction. When you have these mixed markets, what it tells you, and especially when you're kind of moving sideways, you're kind of stagnant, it just tells you that there's not a lot of new money coming in. It's money moving around. Sector rotation, meaning a big fund manager is pulling money out of financials and going into industrials or something like that. They're just moving the money around. There's not a whole lot of sideline money coming in that's driving everything. And so you'd like to see days where all the indexes are moving together. And you'd like to see days where the Russell 2000 is outperforming. It's up a higher percentage than the other indexes. That's also a good sign of that market breadth. But you can see we really haven't gone anywhere the last couple of weeks, and you can see what I'm talking about here. Was a kind of a bullish day right here. Looked like we were going to break out that day. The next day we were down, had a little bit of a bearish reversal day, followed by a bullish day. It did have another bullish day here, then a bearish, kind of a bearish indecision day yesterday. It's just kind of flip-flopping back and forth. And the problem is that in the near term, I could see it breaking out and going higher from here, but I could also see it retesting the lower part of this range. I could see where it could have a couple down days where it just moves down the lower part of this range, and then breaks out higher. So overall, it still looks like it wants to move up. The fact that it's moving sideways here after this strong impulsive move up is indicating we should go higher from here. But again, in the near term, it's possible where you get a few days of weakness where it drops down to this level, and it could drop down even lower than that. It could drop down into here or something, and then take off again. So that's what concerns me a little bit. Is it's not, in the near term, it's hard to kind of read what's likely to happen. I like it when the shorter term chart looks like it wants to go higher and the longer term chart looks like it wants to go higher. I have a lot more confidence in those types of conditions there. But again, that's not saying that we have to panic here or anything like that. The Dow breaking out, it's breaking out to new all-time high. Should close a new all-time high today. But there again, it's still have this kind of sideways range here. The NASDAQ 100 is down today. It's kind of still in the sideways range. So, and this one, of all the other indexes, this one looks like it could, off a day like that, could come down and test these lows down here off the sideways range right here. But I've seen plenty of days like this where it looks like it could move lower over the next day or two, and the next thing you know, it's breaking out and has a real strong day. It's kind of erratic right now and unpredictable in the near term. And by the way, don't be surprised. In these types of conditions, I can flip-flop a little bit. It wouldn't be uncommon for something to happen in the next day or two, and maybe on Thursday, I'm more bearish on the market and think that it could drop over the next day or two. Again, I'm not trying to be a market psychic. I'm trying to read what the charts are showing me. And I've got to be willing to let go of one day's analysis if the current analysis is telling me that something different could happen or could be taking place. My job is not to predict. It's to follow. It's to try to read what those professional traders are doing, and those professional traders, that what they're doing should be showing up in the charts in their buying and the selling, how they're behaving. And if they suddenly are starting to sell and it's showing up on the chart, I got to be willing to at least acknowledge that. It doesn't always mean I make a trade decision off of it. It may mean that I don't make a trade decision. I don't get into anything, or I tighten up a stop or something like that. But we don't want to get too locked in on our analysis to where we can't recognize these subtle clues that could be indicating changes. Again, on the Russell 2000, here's where we saw a little bit of that outperformance right through here. The Russell 2000 was up a greater percentage than the other indexes. That was a good sign that market breadth was picking up. It had a little bit of a bearish reversal day yesterday. Today, it just looks like it's trying to hold on. It sold off early, and the buying's trying to hold on right there. But it's, from a percentage standpoint, it's only up a little over 0.25% when you compare it to the NASDAQ 100 down almost 0.5%. Dow is up almost 0.5%. So the Dow is kind of the leading one. S&P is just up fractionally. So you're not seeing that strong outperformance in the small caps. And so again, that tells me that the market breadth isn't real strong today. And again, that's understandable when you have a day when the S&P and the Dow are up and the Nasdaq's down. When you have a mixed market condition, it means that there's not that full participation. All right, but overall, again, if I'm trying to wrap this up as far as the conditions. I still think the market is acting like it wants to go higher. No problem entering into new positions that look good today. You're always going to find something that could be make you cautious or make you worried a little bit. But overall, it still looks like this market wants to go higher, and so we'll definitely consider some new potential trades today based off of what we've seen so far. If we go down through the other list here, bonds, TLT, it looks like we've broken that uptrend. The key areas that we were focused on was this low right here and this high. We were to break above that high. We were also focused on the fact that it hugged this trend line right through here all the way up. And we had our market update last Thursday, and it looked like it was still hugging that line. And then Friday, it dropped way down. Here it was yesterday, and today it looks like it's moved below this low. So I'm definitely looking at a trend reversal in bonds. It looks like bonds are moving lower. Some of you might say, well, Jerry, is this a bullish ABC pattern right here, and is that just a correction within the uptrend, and we could be ready to rally back up again? That's definitely a possibility, and we'll see if that plays out. If we start to move right back up again, and especially if we start getting back up towards these highs again, then that's definitely something we could consider as that's just a correction within the uptrend. But the fact that we're breaking to a lower low, broke that uptrend line right there. I have a lower high right here, and now we've got a slightly lower low. It looks like it's acting like a downtrend right now, or acting like it's reversing into a downtrend. And so I'm going to say that the higher probability right now is that bonds move lower. And again, we'll see if that changes. We'll make adjustments on anything we see later on. But that would be my expectation as of right now. Gold had a big drop. And what we were looking at on gold was we were looking at this range. I had pointed out this range right here. We had kind of this impulsive move down. It looked like we had a little bit of an impulsive move up. We're moving sideways, which would tend to be a little bit more bullish. But this is a good lesson here in we recognize trend behavior, impulsive, corrective. But one thing I always talk about is it doesn't mean that it's going to guarantee that we're going to know what's going to happen next. We still can't know what's going to happen next. All we're reading and recognize that trend behavior is the probabilities. There's a stronger probability that when you have an impulsive move up and you start to move sideways, that you should get another move up. It doesn't always happen. And here in this case, it dropped down. Now you've got an impulsive move down, and you've clearly got an impulsive move down. And now backing out, you would look at this as being the start of move down right here. This was a correction of that move down. It retraced about 50% of the drop right there. And now we're getting another impulsive move down. Now, could it be that this is completing a larger, let's go to like a longer term chart here. Could this be completing a larger bullish ABC pattern? Here's a larger correction right here. Is this the start of a move up? And this is wave A, wave B, wave C, and then we're going to go higher. That's possible, but one of the problems is this has dropped a little bit too far. You don't want to see a retracement of too much more than 50%. We can go about 61.8% or 618 retracement level. This is almost completely retraced this move up. So I'd be leaning more towards just gold having more downside. Now, one thing that would kind of increase the probability that gold is going lower is you could read how the next correction is. We have a little bit of a bullish reversal day today. Watch to see if this tries to rally the next couple of days. Does it move more back and forth, more choppy? more sideways, lower volume rallies. If that's the case, it's probably just a correction, and you're probably going to have another impulsive move down at some point. What if it has a sharp impulsive move up? Well, then it really throws things into indecision again, because it could mean that it could mean it's reversing right back into a bullish reversal. We'd have to consider that. That's what kind of happened back here. Is we had these impulsive moves down, an impulsive down right here. It was a little bit corrective. This is what it should do, is something more like this. Before having another move down, had just a quick drop back down. Then you had this impulsive move up, indicating a potential bullish trend reversal. Didn't end up doing that. Have an impulsive move down. So obviously we've got enough here, lower highs, lower lows, to say that gold's in a downtrend. We're going to assume that it's going to continue this downtrend until we see anything different. Any sort of rally, though, we're going to keep an eye on to see if it's more impulsive, where it moves sharply up several days in a row, or if it's more choppy, where it's back and forth, up a couple days, down a couple days. That could give us a little bit better clue, and that'll show up in the upcoming classes. We can take a look at that. I'm just kind of trying to tell you what I'll be looking for over the next few days when I look at these charts, and see if it gives us a better indication of where it's more likely to go. Oil has also been kind of erratic. We really haven't had any strong sideways or corrective type behaviors. I mean, you have this sharp move down, this sharp move up, this sharp move down deeper, this sharp move up, this sharp move down. Now, overall, I could look at this whole thing as being maybe more choppy. Maybe it's just a larger, choppy, more sideways type movement in oil. I don't see a strong trend direction. I mean, you could look at a longer term chart and say we're still technically in an uptrend in oil. I mean, look at a 2-year chart here. We can even just go to a 1-year chart. It's maybe not zoomed out as much. And it could be that this is just a correction, and then oil eventually makes a move higher there. But it's a little hard to read when you don't get some of that. You don't get that alternation between impulsive and corrective. When you get impulsive, you should get corrective. Impulsive, corrective. You start getting impulsive down, impulsive up, impulsive down. Again, it could still be overall looking corrective, like I pointed out here, but it could also mean that so right now you have the lower high right here. You had a lower low right here. I mean, if this thing drops to another lower low, it's you got to recognize that it's acting more like a downtrend. But right now it's kind of a no man's land. What we could do is just kind of take a look at the previous extremes. You got this high right here, which is a lower high. You got this lower low right here. If it breaks below that, it's confirming a downtrend. If it can rally back up and break above here, it'd be breaking that. It will have gone to a higher high. Right now, it's kind of in that no man's land, and so this is an area where I don't want to take a strong directional bias in oil right now. The chart looks like it could move higher. It could at least move back up and retest these highs. But you could be looking at fundamentals, with the COVID surge, variant surge. There's been some reports of less demand for oil, right as some of the OPEC nations are increasing production. It could put pressure on oil. Maybe from a fundamental standpoint, you look at that and say, I'm probably a little bit more bearish on oil. Right now, we're just not seeing a real clear direction. But that's something to recognize. It means I don't want to make any strong bets on oil right now until it starts to give me a little bit more clarity as to where it's going. I can be patient right here. I don't have to try to guess. Or if you are, if you're assuming it's going to go higher from here, you're pretty confident it's going to go higher from here. Okay, then get your stop a tight stop. Get it right below that previous low point. Had a bullish reversal day yesterday. It's moved up higher today. Or get it below this low point right here, and just manage it that way. Just manage it through your trade management. The dollar, again, there's another one that whipsawed on us. It looked like we were moving lower. What last updates we did, we had gone to a lower low right here. We had been looking at this range. We were kind of in the no man's land range right here. We broke below that, and then we had moved sideways. So having a move down and then move sideways right here. My last comments on the dollar was that it should move lower. It's acting like it wants to go lower. Well, reverse that sharply right here. Now we've got an impulsive move up. It's right at this previous high right here. It's just the dollar is looking like it's acting more like it wants to go higher. I'd want that a little bit of confirmation to go to a higher high right here. It's pretty close to that, although it has a bearish reversal day today right at that high. So maybe in the near term it pulls back a little bit. It had a pretty good run for a few days there. It could, but then see how it pulls back. You've got impulsive up. Does it pull back in a little bit more of a choppy back and forth? That would make it more likely that it's going to continue to move higher. But again, this is a good example of just because it's acting like it should go lower doesn't mean it always will. This is why you still need to have stop losses and you still need to have risk management, trade management. And this is why you're not going to be right all the time, no matter how much you put in, how many hours you put into this stuff. The VIX is down a little bit today. One of the things I've been pointing out to keep an eye on is this is a week or so ago, as I said, it looked like the VIX was moving lower and then it was starting to move up as we were getting we got a higher high on the VIX right here, which is something that could be leading towards a bigger pullback. Since then, it's rolled over lower high and it's gone to a lower low. It's kind of reversed back down again. Now, when the VIX starts to get low like this, it can stay low like that for a little while, but this is something we'll keep an eye on is you have a VIX moving lower, and if we start to get those extremes in the other indexes or the other indicators, momentum, breadth, and sentiment, you get the market so complacent that it's not worried about a pullback at all. That's usually when you get the bigger sell-off. Because remember, that's what fuels the panic selling. If you're so confident the market's going higher, you feel like there's no way you're going to lose. So you get more aggressive. You put more money in, or you take a more aggressive trade, and then it doesn't work. And you don't know why it's not working because you were convinced that it was going to go higher. Well, what happens is you stop thinking logically and you start just panicking. You're just, I don't know what's going on here. I got to get out. I'm losing money very quickly. I just got to get out. And everybody's doing that at the same time. It's not just you. It's collectively the whole market is doing that, and that's what really fuels those sharp sell-offs. Is when you're got a market that's overly confident, and then it starts selling off, and people don't know why it's selling off, or they start trying to buy the dip, and then the dip doesn't work. It drops even lower. Again, they panic. They don't know what's going on, and they're really losing money now. And they're giving up. They're almost wiped out all the money they made in the last 4 months. That's when the panic really kicks in and drives those prices down. So we want to be able to recognize those conditions when we're there. And we're building towards that. We're not there yet, but we're building towards that, and that's something we'll keep an eye on. Real quickly, a couple more we're looking at. Chip stocks have been driving the market higher here. They've cooled off a little bit the last couple of days. They pulled back. We'll see if that's just kind of temporary. Might just be pulling back to that breakout area today. It kind of retested that breakout right here. we'll see if they start to move higher. But they were driving that market. Notice how they drove higher even before the S&P and the Nasdaq were breaking out. They were kind of that leading indicator. And you really want to focus on. I usually really focus on comparing the SMH to the QQQ, the Nasdaq 100, and those it was breaking out before the Nasdaq 100 broke out, so it was a good leading indicator there. Dow Transports, you compare this with the Dow Index, it's still lagging. The Dow Industrials are likely to close a new all-time high today. We're nowhere near the all-time high in transports. Now we've had a couple good days here. We had a good bullish reversal day here, a little bit of a pullback here, and then a nice strong day here. You can see percentage-wise, the transports. Remember, the Dow was up about 0.5%. This is up 1.5%. So the transports are outperforming, and that's a good sign. It could be an early sign that we're seeing that momentum pick up towards all the indexes moving higher. We'll keep an eye on that. And then Bitcoin has had a pretty strong run. It's cooled off a little bit today, but overall it's still, it pulled back into this area here. That it looks like it's had a little bit of a burst right here, and then notice that kind of choppy behavior here. This looks a little bit more impulsive again. But it looks like it's acting like it wants to go higher. It's starting to stair step back up. So I would tend to be a little bit more bullish on Bitcoin right now. All right. We're going to continue to let's look for a couple of stocks here, and then we'll get in and continue to kind of manage the portfolio. Real quickly here under retail stocks, under the hold section, I like this STKS, the one group, 97 strength rank. Let's switch the signals on here. Now this is looking like it's going to go to a buy signal today. And so this is one that we could either put the alert in and see if we get the email tomorrow and get in, or we can just I'm going to go ahead and get in it today just to, again, kind of go through another example of entering a trade that you can see. Part of the problem, though, we don't want to do this too often because I did this on one of the stocks in the portfolio. We had a buy signal in class, and by the end, but the market slid going into the close, and actually it went back to a hold, and it never did close at that buy signal. Now, so far, it's been okay. We haven't been hurt too bad with it in the portfolio, but sometimes it's better to wait for the confirmation. I did mention in that class, though, that you might want to wait till the end of the day to make sure that's going to close at a buy. I don't have the luxury of doing a live class to do that because I got to wrap things up about an hour before the market closes. But if you're going to jump the gun like that, at least wait till right before the close to make sure that's still that buy signal. Or you could, like I said, you could just set the email alert, and if it triggers tonight, sends you the email tonight, you can get in it tomorrow. We did get one that triggered today on Riot, and so we'll be getting into that. I got the email last night, and I'll go ahead and enter that one today in class. But this is what I like. Again, you have the nice little pullback right through here. Then you have this little sharp move up, and then this little consolidation, and then you're moving higher again. Now, it's always possible in a situation like this that this could be a bearish ABC pattern, wave A, wave B, wave C, and we're going to go lower. But typically, after you've already had a little bit of a larger pullback right there, and this kind of looks like it could be wave A, wave B, wave C through here, bullish ABC pattern, it makes that less likely. But I'm still going to be aware of that, and we'll manage our trade accordingly. If it, I'll probably put my stop down below this low, and if it does move back down like it's a bearish ABC pattern, I'll go ahead and stop out and we'll keep our risk small so we don't lose very much. On the other hand, if it's moving back up, the upside potential is there for it to go back to its previous high. There's a lot greater reward potential than risk, in my opinion. Another one that we'll have to watch for a little bit, but if we go under computer and technology, under the hold section, some of these we're already kind of watching, and one of them we're in microvision. We're watching ZDGE. We'll take a look at these charts in our watch list too. But I like this net list, NLST, 98 strength rank. Now, I think I pointed this out in a previous class that it looked like it should have another move down. It looked like this was wave A, wave B, should have another move down. And it looks like we got that over the last couple of days. So let me back this out. So it's looking like here's your impulsive move up. This looks like wave A, wave B, wave C. Now, it might not. This thing might be coming all the way back down. Has a little bit of a bullish inside day today that could indicate that maybe that's done dropping. If this is going to go back up, it should be starting to move back up here pretty soon. We're right at about a 50% retracement of that move up. This is about the area where you would expect it to, if it is a bullish correction, starting another move up, this is where you would expect it to find some support. But that's why we're going to put this in the watch list. We'll wait for this to go back to a buy signal as confirmation. If it continues to drop, we may boot this out of our watch list in a few days if it continues to fall. And no harm, no foul. It never triggered, so we wouldn't care. But it's a potential bullish ABC pattern, and that could be confirmed if it moves back up and goes back to that buy signal. And again, with the fact that stock consolidated for so long and then really broke out, consolidated for so long and then broke out and then now it's pulled back, this is where this should be really getting started on a nice uptrend, steady uptrend, potentially. So that's one we'll put in the watch list. A couple more under the autos, tires, and trucks. NEO is one I'm keeping an eye on. 93 strength rank, down there a little bit, but it's the highest of the hold lists here. But I like, it's kind of forming a little bit of an inverse head and shoulders pattern. This little move right here, this could be the head and this could be the shoulders. It's moving more sideways right here. You have a little bit of a V-shaped move. Looks like it's trying to kind of build a base. It's already pulled back quite a bit. If you look at a longer term chart, it's already come down. So to me, it looks like it's kind of bottomed right here. Here's a larger move up. This looks like a larger correction back down, about a 50% retracement of that move up. And then near term, it had this little sharp move up and this little sideways move. It looks like it's just subtly acting like it wants to go higher. And then the whole group, there's really been kind of these electric vehicle stocks really exploded late last year and took off. They've really come down off their highs in the last several months, but there's been kind of a big push, particularly in the Biden administration, to really start focusing on building, and with the infrastructure bill, there's a lot of it focused on building a infrastructure for electric cars. Think of gas stations, for electric cars. It'll probably just, you might as well just put charging stations at gas stations. That would be an easy way to go about it. But there's kind of there's a real big focus, and obviously we've heard, all the global warming stuff going on, talking about it with all the weather, the extreme weather that's going on. There's just a big push towards it right now. And whether you believe in the politics of it or not, it doesn't matter. That the trend is moving in that direction, and so you kind of trade the trend. And so I think there's that potential for a lot of these to go higher. So we'll put in a watch list on this one to trigger when this goes back to buy. Now I did look under the same sector, autos, tires, and trucks on the buy section to see if there were any that might have already triggered a buy. And obviously Tesla is one that now it's just under that 90 strength rank, but this is definitely a leadership stock in the group. It has a very similar pattern. It looks like it's starting to have some higher highs, higher lows as it's moving back up right here. Recently, it had this little breakout move up, and then it's been moving sideways a little bit. It's just acting like it wants to go higher. If the group's going to go higher, this is going to be part of it. I mean, it's the big one in the room, and it already has a buy signal, not too far away from where it first triggered that buy signal. So this might be one that I kind of want to add to the portfolio here. So I'll do that today as part of that process. All right, let's take a look at the portfolio here. And good news is we're up $1,100 since we started this week and a half ago, or was it 2 weeks now? Something like that. That's a good sign. Now, again, I almost would have rather we started down a little bit, because I think sometimes when you start doing this and you start up like this, it makes it look like it's easy and that all we're going to do is make money. These things are going to fluctuate. You're going to have ups and downs, and you're going to have gains and give back some of the gains as you're waiting for the trend to go higher. But I mean, hey, I'll take a positive result there. But I just don't want you to get so fixated on, because there's definitely a chance we go through a little bit of a downturn and that comes down a little bit, and I don't want you to feel like the system is failing. It's not. It's just part of the overall system. It's how things work. And I'd like to see it go back and forth a little bit so we can kind of learn from those experiences. You can learn that no matter how long you've been doing it or what your knowledge level is, you're still going to get this ebb and flow as part of the process. That's how the game works. That's how every trader, what every trader deals with. So let's look at the individual stocks, see if we need to adjust stop losses here. PFMT, I'm not going to make any adjustment on this one. We moved down a little bit today. We've been flirting with this breakout. We haven't been able to break out yet, but we're still just kind of moving sideways here. It still looks fine. My stop I believe is down here to give it some room to go. I'm not going to adjust that yet because I want to see it break out. If it breaks out, then I'll look to move that stop up. But I don't see a reason to do anything with that yet. Let's look at RM. Now, we did adjust the stop on RM when it broke out. We got in it in here, and it broke out on this move right here. And then we moved the stop from down here a little bit lower right up to right below this range right here. So if it came all the way back down, we'd be basically breaking. We wouldn't lose anything. But again, it's not uncommon when you get a big explosive move like that you get a little bit of a pullback. It's pulled back though on lighter volume, and it's just kind of consolidated a little bit. It looks like just a normal little pullback. You know, what would concern me a little bit? Well, if it starts to, here's your move up, you start to retrace a lot more than 50% of that move, especially when you get down around here, I'd be pretty concerned that maybe it's especially if it does it sharply. It looks more impulsive coming down. As long as it's kind of chopping back and forth, as it's pulling back, it still looks fine. MSTR, I do want to adjust my stop on MSTR. Why? Well, because we did break out. Here's our breakout area right here. We did break out of that. And so I'm going to move the stop below this last correction area right in here. And I'm just going to put it about 590 as our stop, just to get a little bit below that area right there. Now, why is that significant? Well, and why would that be a good stop loss area? Well, again, it's broken out, so you got a higher high right here. This was the higher low now. If this comes all the way back down and drops below that low, now you've got a lower low, and it could be reversing the trend. It shouldn't come all the way down there. And so that's a spot where I know I'm probably wrong, and you always want to try to place your stops at a point where you know you're probably wrong. So let's go ahead and make that adjustment. Let's go into my portfolio, MSTR. We're going to come over here to the stop price. We originally had it at 410. Let's click to edit the stop price. I'm going to change it to 590. And then click save. There we go. Okay, we moved that stop up. Mara. This is one that we had a nice move on, but it also broke out right here. Pulled back a little bit today, but it did break out. So I'm going to do the same thing on this one again. There was the higher high, higher low right here. So let's get a stop right below this low. It's at about 26. And if you put your mouse, so what I did here is I picked the lowest. Here's the correction right here. You pick the lowest day, which could either be that day or this day, whichever one you want to use. I'll use this one right here. This one looks a little bit lower on July the 27th. The low of that day was $26.16. So I'm putting it just below that at 26. And that might be a little bit tighter. I mean, this thing hasn't, it's just barely kind of moved up right here, but I think we're okay, especially since these market conditions look like they're starting to run here. And if it does start to roll over here, I'd probably want to get stopped out of some of these trades so I don't risk too much more than what I'm already risking. And I want to add some positions too, so I want to reduce some of the risk exposure as best I can. So let's change that stop on Mara from 18 to 26. Now, ASPN, this is the one right here that we were, I think it was like this day right here where it was about to go to, it looked like it's right here at the highs. It was going to be a buy signal. And then it faded a little bit into the close, went back to a hold. So we never got the buy signal now. It still looks okay. This still looks like it's just kind of pulling back. It should end up moving higher. But that was the danger of not waiting till the end of the day to make sure that was going to be a buy signal. It faded a little bit. And that could happen. Like I said, on the one we're going to get into, STKS, we're going to go ahead and get into that one today, but it may end up, you never know. It could end up fading into the close there. This one still looks good though, so I'm not panicking on this one just yet. All right, so let's add the ones we want to add. The first one we want to add was I got that email on Riot. This one was under the business services. This is from last week. There it is, Riot blockchain, 99 strength rank, but it triggered the buy signal yesterday, and I got the email last night, and it hasn't moved much today, so it's still in a good spot. So I'm going to go ahead and get in, and I'm going to put my stop down below. I could put it below this low right here, but because this low is not that much further, I'm gonna give a little bit of room to start with. So let's get it down below that low. So we're gonna put it at $20.50, or at least I am. You can do whatever you want. So let's add this to our portfolio. I'm going to add it to the stock specific class portfolio. My stop is going to be at $20.50. Number of shares. 500 would be too much. About 100. Ooh, 100 would be too much. Again, I want to keep my portfolio at risk at between about 1 and 1.5%. So let's drop this down a little bit more. Let's go to just 50 shares. I'll go 60 shares. That's right at 1%. Let's do that. So it'll be 60 shares. Total amount in the trade would be $2,292. If I get stopped out, I'll be losing a little over $1,000, which is 1% of that portfolio. And let's go ahead and purchase and go to my portfolio. There we go. We've added that one. I also wanted to add SDKS from the retail sector right here. That's the one we looked at today, the one group, 97 strength rank. Again, it looks like it's going to close, or could close with a buy signal. So we're maybe jumping the gun a little bit on this one. If it happens again where it fades in the close, then we're going to wait on the next one. We'll send out the email and be a little bit more patient. Let's add this to the portfolio. We're going to add it to the stock specific class. Our stop price is $7.55 on that one. Number of shares. We can do 300. Let's try 400. 400 shares would be a little over 1%. We have that range of 1 to 1.5%. I think that'll work. Let's do 400 shares. Purchase and go to my portfolio here. And then I want to get into some Tesla. That was under the tires, autos, and trucks. It already had the buy signal. It looks like it's consolidating a little bit. On Tesla, I had the stop, initial stop at 615. Number of shares, let's try 20. Nope, that's too much. We can do 10. That put us right there. 10 shares, right at 1% risk. All right, purchase and go to my portfolio. Oops, did I put it in the wrong? I think I didn't select the right portfolio. Sorry about that. Let's try that again. And identify the stock specific class here on that one. All right, our stop price is at 615. And we're doing 10 shares, I believe. At 1% risk. purchase and go to my portfolio. Okay, there we go. All right. That's all the ones I wanted to add. We still haven't used up, we still got a lot of cash left, which is good. And hopefully soon, you know, if we can start moving these stops up here, we get some of these that start triggering the stops and we can cash out of them. And well, that's a little bit down the road. All right, let's see which ones we want to add to a watch list. We want to add, well, first of all, let's take a look at our watch list here. See if any are close. Dillard's actually started to move up out of this kind of sideways range. It had been at a sell, we're to hold. We're still waiting for it to go to a buy, so I'm still waiting for that that trigger. ZDGE, you're still waiting on. That's going to be a little while still, but I still don't see a reason to kicking these out yet. Some of these are getting close, so Riot, we can take that out because we're in it now, so let's remove that from our watch list. ZGOC, this one was kind of based on back here where it looked like that was wave A, wave B, wave C. We drifted down a little bit. We're drifting down. We're getting down there a little bit too far. I might hang on to this another few days, but if it looks like it's going to be retracing that entire move, I don't know that I'm going to be interested in it. It really needs to start moving up pretty soon here, or I'm going to boot it out of the watch list. And then I know we're running over time here a little bit. I'm wrapping things up. KRUS. Now this one is moving up today, and it seems to be moving up right at this breakout area right here. Found bounced off of there, came down here as support. So that's a good sign. This thing might be moving up and might give us that buy signal here pretty soon. So no reason to kick that one out. All right, let's add the ones we wanted to add in on computer and technology. It was this NLST net list. Let's add to watch list right here, this little green button. We want to add it to our stock specific class. Save and go to watch list, make sure it gets put in there. You want to set signal or create an email alert here to let me know when it goes from hold to buy. And then one more NEO under the tire, autos, tires, and trucks. It was under the hold section here. NEO is right at the top. Add to our watch list. Which one? Stock specific class. Save and go to watch list. And we'll create our alert here. Email me when it goes from hold to buy. All right, that's it. Hopefully that was helpful. We'll see what happens on Thursday. We'll see if we can add some more, maybe adjust some stops on Thursday and keep this thing rolling. Let's make some money on this thing. All right, have a great week, everyone. We'll see you on Thursday for the stock specific class. Bye now.